Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name's Kurt Chisholm. I'll be your host, and today I'm joined with Gord Neal. How you doing today, Gord?
I'm good. Thank you very much, Kirk.
Good. Well, glad to have you in the show. For those of you who don't know Gord, tell us a little bit about your background.
So I'm currently the CEO of World Copper. I'm in the commodities business. I've been in the mining commodities business for about 25 years. My background really is in a breadth of metals, from gold and silver and copper and uranium. I was one of the founders of Mag Silver, which we took from a $50 million market cap company to it's now trading at 2.5 billion. And it is probably one of the preeminent silver deposits in the world. Average grade for Mag is about 500 to 600 grams per ton, which is really high grade. One of the mantras that I have is grade is king. So you're looking for good grades and you're looking for tonnage. The other company that I took forward was New Pacific Metals. Its silver projects are in Bolivia. Took that from $100 million to 1.2 billion, and creating employment and wealth for a country that needs that kind of employment and that kind of capital growth and GDP. So those are the two. Was in a company with a uranium company in Africa. So I've been all over the world. I've worked in Canada, the United States, South America, Africa, and then China. So that's my background in terms of a short sort of clip of my background in terms of what I've done in the commodities industry.
All right. Well, there's obviously a lot to talk about in your history and your process, and love to hear about some of it. But let's start with copper. So most people don't think about mining. They don't think about commodities. It's just kind of part of life and no one thinks about it. But it's obviously copper is a really important part of the every economy. So can you talk to us a little bit about copper, how it impacts the economy and what any sort of trends that you're seeing in the copper space?
Well, copper's been around for millennium, thousands of years. It's actually one of the first metals combined with tin that really created the Bronze Age, and that was 2,000 years ago or more. We need it today, though, specifically because of the transition from carbon-based energy with fossil fuels to electric energy. So we need to have as much copper as we can. Transitioning from internal combustion engines, the current car has about 50 pounds of copper in it now. An electric vehicle will have 150 pounds of copper, and we need obviously to replace every car. There's going to be a lot of copper needed. To actually power those cars, we'll need more transmission. We'll need to up our grids to be able to um, feed the cars and make sure that they have enough energy. That means upgrading transmission lines. That'll take a lot of copper. So the use of copper and there's copper in wind turbines and in solar panels, and that's increasing every year. We don't have enough copper in the mining pipeline to anywhere near supply what we need for the next to reach the 2030 emissions that were goals that we have, or the 2050. Now, I think they're going to have to change some of those targets because we just never meet them. But we need copper to make any of these goals.
I mean, do you really think that any of those targets are realistic or meetable? I mean, I always kind of looked at those as pie in the sky. No one's really paying attention. They just keep moving the goalposts to just, as kind of a social score. But um, things have changed. I mean, nuclear is becoming a thing, and that seems to be, in my opinion, the best energy generator that we have that's both clean and abundant. So what are the trends that you're seeing in the energy production space?
Well, you just hit on one of them. I think you're absolutely right. I think when politicians want to placate their constituents and they're, excuse me, and they're talking about, you know, transitioning to clean power, they made these goals that were totally unrealistic. And even today's consumer who was buying electric vehicles started to jump out of the gate have slowed up because there's not enough stations to power them to get to the places they go. So they've slowed up buying them, which slows up the copper demand, the lithium demand for the batteries, et cetera. But they will eventually get there. Um, how do we get there? You also hit another point. I don't think you can do this without nuclear. I think, yes, you need copper, and yes, you will have electric vehicles, but to actually supply the amount of energy we need to do it, you'll have to tap into nuclear. There's solar and wind can't do it. If you're going to shut down coal and oil, you need nuclear. It has to happen. So those two energy pieces of the energy puzzle, copper to make the actual cars and wind turbines and solar panels, but you need the actual energy to power all that, and you can't do it with wind's unreliable. It can only really do up to 80% at the most. There's always a 20% delta between what it can provide and what you need on a country basis. Nuclear could do it all. People are still, thinking back to Chernobyl or Fukuyama. Um, so yeah, you're right. It's going to be hard to make those, but copper will still be a big part of this of the equation going forward.
Yeah. So what is, I mean, what is the real value of copper? I mean, it's in everything. It's still being used in everything for any sort of electrical transmission or part of electronics. But are there other metals that people can use, or why does copper just continue to be the main source here?
It's because of its chemical properties and its physical properties. It's malleable. And the way copper molecules line up, it's one of the most transmissible and durable metals when it comes to transmitting electricity, moving electrons along its pathway. Silver is actually more conductive than copper, but the problem with silver is it's way more expensive, and it's not as durable as copper. So copper is the go-to when you're making electric, as you said, electronics, motors, et cetera. And so the problem for us is we don't, even today, at today's rate, without putting the electric vehicles into the mix, we still are not creating enough copper to meet the demand. AI for computer components, computing, quantum computing will require again more copper circuits on circuit boards. So we still don't are not produce we'll still not be producing enough, even if you took EVs out of the equation. We've got to find more copper. And you said it earlier at the beginning of the podcast. We don't, a lot of people don't really understand why we need so much copper and where it comes from. But companies like World Copper, where I'm the CEO, we have the ability to be able to get that stuff out of the ground fairly quickly, and we need it quick.
So So I guess the question, I mean, so some mining operations like silver is basically a byproduct of everything else. There's not a lot of silver mines. But when you look at copper, like there's huge copper mines. What is I guess I don't want to say the pipeline because that's dependent upon what's being brought out of the ground, but what's the kind of the known amount of copper that's out there and that needs to be pulled out? Like where's the deficit? Like where's the margin of difference between what we have and compared to what we're pulling out?
So the deficit is about 100 million tons of what we need and what we don't have. And the biggest producer of copper in the world country is Chile. They produce the most copper of any country in the world. Then I believe it's actually Africa in the Congo. So the amount of yearly production doesn't meet the demand at the moment. And where do we get it from? We have new mines coming on stream. The problem, Kirk, is this. Most of the copper that was found early on, and the way you do this, it would be in any business, the closer it is to the surface, the easier it is to get out, and the more money you'll make because the deeper you have to go, the more expensive. But what's happened is we found most of the shallow copper mines in the world so far. I'm sure there's places in Africa that are untouched and other unexplored places where you're going to find some copper that's closer to the surface. But most copper mines and most mines in the world are going deeper. And as they go deeper, it gets more expensive and the economics change for the mining company. So you got to go, you've got to, first of all, you got to get to it. And that may seem like a weird thing, but if it's 400 meters under or 800 feet or 900 feet underground or 1,000 feet, you got to get to it first, which can take you a year, sometimes ramping down to these things, or a year and a half. So bringing copper online into production just doesn't happen overnight. You've got to get to it. You got to make sure, and you don't really want to start a business that is uneconomic. So first, you got to find a deposit that exhibits the correct economics so you can make money. If you're running a business that's constantly losing money, it won't stay in business for long, even though you're looking for copper. So that's why we have this deficit.
So I find that when it comes to basic commodities, supply and demand solves all problems. So if we have this deficit, why isn't that shooting the price of copper up?
It is. So last year, this time it was probably 350, 360. It went as high as $5. And you have people in the United States, some of your pundits and analysts are calling for copper this year to hit $5. And over the next 5 to 6 years to hit as high as some of the numbers have been as high as $10. I think that's a stretch. But if copper gets to $4, $5, $6, there are a lot of projects that I just talked about that are deep or are some that the economics don't make sense. Once you get to that level of per pound cost, that's $4, $5 per pound, $6 per pound, then those projects become economic and you can get them into production and narrow the delta on that deficit that you're talking about, the supply and demand.
What's the average cost? I mean, not necessarily for your projects, but in general, if you can ballpark it. Well, like, what's the average cost to pull the copper out of the ground?
Uh, it depends upon the deposit. It's very, very specific. Um,
Maybe a range.
yeah, so on a per pound basis, if you're on a per pound basis, on an average basis, I would say most copper deposits are and I'm guessing here, to be honest, and it would be a range. It would be 250 to 350, maybe $2 to 350 a pound. So if the commodity's at $4 a pound, you can make money, but it's a very slim margin at 50 cents a pound because you've got all the kinds of other added costs, is just sustaining capital, maintenance, all those things can eat up those profits fairly quickly and usually do. But so 250 to I'm saying $2 to 350. So some of these projects that are on hold because of those economics and the price of copper have been on hold. Our project, for example, is about $2.40 a pound in all in costs. So at $4 copper where it is today, our project is a profitable project, and we will get banking support for that because it is profitable. No,
Okay.
sorry, it would be profitable.
Okay. So, it's funny because Wall Street refers to copper as Dr. Copper, and it's referred to as a way for it's kind of a leading indicator for the economy as seen. Um, have you seen that? Like, why is that the case? So, like, why is that always kind of leading the economic, the horse that leads the economic buggy, if you will?
Well, because you're right. It's used fairly broadly in business and in operations. I mean, in your house, there's so much copper wiring. There's copper in all your appliances. It not only is industrial, but it's commercial as well. So, it can be so they look at copper all the time as a leading indicator of the health of the economy. And when it rises, as a result of you said of a supply and demand deficit. And China is the biggest producer and consumer of copper. So one of the things that the United States needs to try to do is to take that away from China. It'll be difficult because they have such a big portion of the concentrate market, copper concentrate market. But looking at Arizona, particularly where we are, and Arizona produces 71% of the US's copper supply. There needs to be more mines in Arizona and more. There's some in Montana. There's some in Utah, and so there are some particular states that are copper centric. And with your new president in place, a person who said drill baby drill, and we do a lot of drilling in mining, and it does assist with energy security, which the United States, which he's trying to affect. Then those states need to step up and start permitting a little quicker so we can get these things into production.
Yeah, you raise a good point because as of today, I mean, Trump was inaugurated a few days ago, 2 days ago, and obviously the administration is very different from what we had before with Biden. How do you see that changing the copper industry? Like, what is going to actually change other than rhetoric? Like, are there things in place or things that people are looking for? Because I know mining is always seen as this dirty activity that people hate. The environmentalists are always protesting mining. So, like, what is actually going to change in your opinion?
Well, that kind of remains to be seen to see what he does. We know that he's been very like this is his second term and he's not fooling around. He knows the first time he was sort of they blocked him at exits and things, and he's not letting that happen again. So, and you can tell by the way he's writing executive orders. So on the fracking side, on the petroleum side, I mean, there's going to, one of the things that happened, I can't remember the exact year, but the energy self-sufficiency in the United States just rocketed from being an exporter to an importer within 2 years because they allowed fracking. He opens that genie in the bottle again, and the United States, I think the United States is already exporting oil, but it will export a lot more. So if Trump does the same thing with mining, the way that can be effective is there's a lot of even on our project we have one part of our project we're on private land, so we can get that permitted fairly quickly, so we can get into production. The other two-thirds of our project are what are called Bureau Land Management land. So it's federal land. And the permitting of those BLM lands, those Bureau of Land Management lands, is about 3 or 4 times as long as it takes 3 or 4 times longer than it does on our private land. One of the things the government could do, and Trump might do, is to say to BLM, listen, you need to speed up our permitting so we can get these projects in production faster so we can get this copper out of the ground and get it in our inventory in the country. So changing the permitting length of time and getting that runway and that permitting process shortened would go a long way to getting more metal, strategic metal that DoD needs, titanium, rhodium, et cetera, into the hands of the Defense Department that needs it, and the Energy Department that wants the energy. That is what the government could do.
Okay. Yeah, it seems, I mean, you mentioned a few different materials. I mean, one of the things that we've seen is certainly with China, there's some strategically important metals or materials, rare earth metals, things like that in certain countries that we don't have in the US. And there's a security element of having access to that, which I know tends to lead to conflicts around the world, is basically securing assets that we need. You know, for the last 70 years, 75 years, it was oil. And now that we're pretty much oil independent and sufficient, we don't need Saudi Arabia the way we did 75 years ago. But metals, it's kind of still a thing. So what are you seeing? Are you seeing that at all happen in copper, or what metals are you seeing are most, I guess, highest on the list for security purposes?
Um, Titanium, tungsten, um, um, metal hardeners that they use in as alloys for their planes, for bombs. Um, those kinds of rare elements are ones you're correct. China has a big hold on, not only in China. Again, China is a big country, and they bypass all of their. One of the problems that they don't their environmental restrictions are not as stringent as Canada or the U.S. And so they do pull a lot of rare earths out of the ground. So they're the leader in it. And they've gone into China and in South America, particularly, sorry, they've gone into Africa and South America, particularly Africa. And what they did years ago was they gave a lot of African countries, a lot of loans. And so um, they gave them revolving lines of credit in the billions of dollars. And then when those countries could not pay those back, they stepped up a few years ago and said, you know what? We don't really want your money back. We don't need the money. What we'll do is give us your metals. So this was purposefully done. They planned this to give them billions and then cancel that debt, but give us access to your metals. And so now they have access to the Congo and to Namibia and to all of those African countries. And a lot of the new leaders are complaining that they're behind the eight ball and they were conned about it, but it's too late. So the United States has rare earth elements and metals in its own backyard. It needs to start mining those as well. They're harder to find and there's less of them. That's why they're called rare earth metals. But they need to start looking at those tungstens and titaniums, and molybdenums, et cetera, to get those metals in their basket.
Yeah, I mean, I think China learned that lesson from us. We
Yeah, that's
we
true.
we
That's
we started all that. We've been doing it for decades, and
that's
people don't
true.
want to know that. But
Yeah.
um, okay, so well, that's good to know. I mean, are you? I mean, certain materials, like lithium, are really toxic and dangerous, and there's certain mining operations which have certain processes that are really toxic and dangerous. And a lot of people worry about that. Do you have that with copper, or what's are there concerns about that, or is just more of just the eyesore that you have this huge mine that's the issue?
It's a combination. First of all, I should say that I'm in Vancouver in Canada. I told you earlier I was born in Boston, so I'm a U.S. citizen at heart. But I'm in Canada, and Canadian mining companies have the best record in the world of environmental safety. We wrote the book. In fact, every other mining country looks at our environmental safety standards as the go-to and the leader. We take it really seriously. If I go into, I live in Canada. I said I live in Vancouver, but when I go into Bolivia, as I said before, it's their country, it's their metal. I treat them with respect. I treat the land with respect, and you got to look at it that way. So as long as you go in with that kind of an attitude, yes, it can be an eyesore if it's an open pit because becomes this great big hole in the ground. Underground mining isn't as offensive because you've got maybe a big what they call a shaft or a head frame where you're going underground with buckets and elevators and pulling the metal up so you don't see a lot of above ground disturbance. But that's how you get around that in that way. So lithium production can be its evaporation ponds and its use of water is a concern. But for copper, in our case, as I said, in Arizona, we have what's called an oxide deposit. So all we have to do is what's called heap leaching. So we basically disturb the ground. We make a pit. There's a hole in the ground, but we put that in a pile and we spray on it very, very weak acid solution. So it's not strong and it's in a closed circuit. So there's a liner underground. It all gets collected and it all gets recirculated. So if you know that we're in that kind of, so it's the most environmentally friendly type of mining is called heap leaching. So that's what we are doing at World Copper in Arizona. And it is in a closed system. We don't have any other than the weak solution, which gets reused. We We don't do anything else to the environment. We make a solid, what's called a copper cathode, using electrolysis essentially by putting it in a solvent extraction and then extracting the copper and then moving it to an ionization building, and then it's ionized, and you make this plate of copper. That's it. So it's not that deleterious to the environment. Copper is a very safe type of mining.
Oh, good, good. Well, that's good to know.
Yeah.
So, um, I mean, copper seems to be it seems to be a lot of copper deposits around the world. It doesn't seem to be one of those things where it's only concentrated. You mentioned Chile's one of the largest deposits, but it seems to be relatively spread out around the world. Um, are there is the amount of copper out there and the copper mines out there, does that contribute to it continuing to stay at a relatively low price? Because, if I'm looking at this, just bringing up the copper chart going back decades, and yeah, $5 was pretty much the highest, or five, whatever it was, 5.2. Um, we're at the higher end, but it's been, it's not like it's not like gold where it just keeps going higher, progressively. It kind of stays within this range. So, do you see the prediction? You think it's going higher? Do you think that that's going to be a short-term thing, or do you think there's like a new normal, which is just this higher price?
So on the gold side, gold is it's a hedge against the U.S. Dollar. So it's actually a currency, or an alternative currency. When you have problems in the world, wars, etc., people go to gold because they're afraid of what that negative impact is going to be on, particularly on the U.S. dollar. So you can't really compare it to the movement of copper. Now, copper, you talk about its movement, and we'll go just slip back to gold for a second. Gold's actually done fairly well given the inflationary pressures that were on the world over the last 4 or 5 years since COVID, through supply chain, et cetera, and a revamping to world norms in terms of commercial spending, et cetera. So, but gold has really held up its end, and it's surprising that it has. But it again, it's a hedge against the U.S. dollar, and silver follows gold because it's a precious metal, and it's also a currency in terms of coins, and so it has a specific ratio to gold, a constant ratio, which is the average over the last ratio from silver to gold over the last I'm going to say decade is probably about going to 50 or 60 to 1. But on the copper side, the price of copper is predicted to go higher. Now it's ranged between $1 and $3 for, if you look at your chart, for quite a while. And then it jumps last year from 350 to 450 to 5, as you said. Then it trails back off to 4. I believe the long-term price, consensus price, by analysts on copper right now is about 360, 380. But the long-term view of a lot of analysts of the price that it can raise to, as I said earlier, is $5, $6, $7 a pound. And the reason for that is the deficit, and the need that, as I said, we need energy. But we need, if we're going to move from carbon-based energy, we need engines and appliances that use copper, particularly cars, particularly vehicles. And it's really the vehicles and the turbines that are going to generate that energy, that are going to drive the copper demand. And to be able to plug in all of those cars, particularly, you need to upgrade your grid. So if you can imagine, all the transmission lines in the United States have to be upgraded, and in China's already started to upgrade their transmission. And I'm sure you've started in the United States. We haven't really gotten anywhere in Canada that I know of. But if we switched every gas internal combustion car today to electric, we couldn't power it. We don't have the energy. We just don't. So to do that, we need more energy. And you spoke about nuclear. I believe that there's no way getting around. You got to add nuclear to the equation to make it work. And then to get all of that power to those cars, you need to upgrade the transmission lines, and that's going to take a lot of copper and it's going to be quite expensive.
Yeah, that's the part. And what do you think? I mean, I read about this 25 years ago. Like, um, our energy grid in the U.S. is a mess. They've talked about a smart grid for decades and never seen any progress with it. With all the problems we have with our energy, transmission and production in the U.S., like, what is stymieing any sort of growth there? Because, technology stocks going through the roof, all this progress made, and we have made almost no progress in the electricity generation storage, transmission space when all these big ideas people talk about are just going nowhere. Like, why do you think that is?
Yeah, well, I think it's just I think it's hard to manifest. I mean, you actually added just another aspect to the mix, which is storage. If we could figure out storage, it would actually have a really huge effect on this because taking trying to transition from coal burning generating plants and gas and oil generating plants to solar and wind, there's just not enough. We don't have enough, and all the locations are not set up for just to have solar or wind. So you need to augment the system with other forms of power. And so they're now talking about having these small localized nuclear plants, small ones that could
Modulars,
power. What's that?
the modular ones?
Yeah.
Yeah.
So you could, I mean, I'm not sure that's the way to go, but without another source of power, you can't up this. This will not work. And now, what might work, what might help is storage, a vanadium storage battery system, maybe. So on off-peak times, when everyone's sleeping and you're charging your car during the day, they've stored this energy in these storage systems, and you can draw from that. You can draw from that storage system without another source of power other than wind and solar. If you want to exclude fossil fuels, you can't do it. You have to have nuclear in there, and you have to have a battery storage system.
So let me ask you this because I've been hearing about this recently. Are you familiar with graphene?
Yeah.
How is that playing in? Because I remember seeing a video 15 years ago about the electricity, the transmission, holding charge, all that with graphene, and it was just fascinating. How does that play into the next generation of energy, whatever, the complex?
You see, Kirk, I'm not certain of this. I actually have a chemistry background. My mom was a chemist, and my university degree is chemistry. But I don't really have a good grasp on the answer to the question you're asking. However, I will tell you this. One of the questions you posed or statements you made was about lithium. And lithium carbonate batteries now are the go-to battery for electric cars. I'm not certain. And of course, in my business, what happens is when a metal or a mineral becomes in vogue and it's needed, we shift. So all of a sudden, when we need a lot of copper, all the miners, the process of finding the material is the same, whether it's gold, silver, copper, or vanadium or lithium. So all of a sudden, if it was graphene, we shift and try to find graphene. Um, but lithium jumped up and it's lithium carbonate, so we need to now find lithium. But in the labs, what they're working on now is what you spoke about. Either they're talking about iron and graphene and lithium and nickel and different materials that they can make batteries out of that are lighter, faster charging and easier to make, and easier to make. So I'm not certain the lithium carbonate will wind up being the battery that you have in a Tesla in 5 years from now. It might be some kind of, and graphene, I think they use more for the anodes than they do for the whole battery. It's the connection, an anode cathode situation where the electron transfer through the poles is where you release and restore the energy in the battery. So I think the graphene portion you're talking about is that portion of the battery. But yeah, so that's my answer to your comment about graphene.
Okay, cool.
Yeah.
So, um, and I guess the last question, I'm just curious because I know you had some background in uranium. One one comment I've always been curious about is, I mean, when you had Fukushima, obviously a bad event, um, and places like Germany and France went. Uh, I don't know what happened to them. They had load power and they just decide we're just going to go cut our own leg off and decide to allow Russia to push us over by, mothballing our plants. I mean, Germany's just beyond me. But anyway, um, that trend is moving backwards. A lot of people, Biden came out with his thing, hey, we're going to change things. I don't know what's actually changed. Um, but, it takes 20 years to build a nuclear reactor. So I guess my question is why hasn't the uranium market adapted to this? I feel like, you know, it should be on fire since that announcement. And yet it's just kind of been just been kind
So
of it hasn't really taken off. It feels like it's underpriced. There's a lot of things about it. I don't know what your thoughts.
So if you just brought up a copper graph in front of you, so bring up a uranium. I don't have my graph in front of me. I'm relying on you, but I think you can see over the last 24 months that uranium has had quite a big spike. And if I remember the price, I think it jumped from $50 a pound to $140 or $150. So it got so and again, you're right. What happened when Fukushima happened was a lot of uh, countries took their nuclear offline, and that's again a result of politicians responding to their constituents. When constituents are frightened, when they start pounding the table, when they start kicking the doors down, and they say, "Look what happened in Japan. This many people died. It's dangerous. We don't want it." Then the politicians, because their job is to stay in power, they just they they acquiesce and say, we're going to shut it down. Now, was that the right thing to do? I don't know. I don't think so. I think, and you're right, if they opened up themselves to Russia's vagaries by going to natural gas, where Russia could dictate what it wanted, and um, and now they're thinking about going back to nuclear because as you and I have just been talking in this podcast, it's hard to get away from, and it gives you an optionality against Putin shaking his fist and saying, "I'm going to tell you what to do because I'm controlling your energy supply." So yes, nuclear is necessary. It will come back online. I'd be very surprised if Trump doesn't make some kind of a nuclear statement to say we're going down that road. 20 years to build a reactor, I think is a bit long. I think they can do it in less time than that. These days with the technology they have, the problem is
It's the red tape. It's the
yeah, and that,
restriction.
and
Yeah.
again, and again, like I said to you about a copper mine going into production, if United States wants copper faster, then my two-thirds of my project is in BLM lands. If they change that permitting process from 7 to 8 years down to 2 to 3 or 4, then I could have that copper in production in 4 years and in the U.S. market.
Yeah, just pulling up the uranium chart. I mean, it peaked exactly a year ago today. So
Yeah,
January 22nd,
yeah,
2024, it peaked at whatever that price was, like approximately 106. Now it's at
106.
74.
Right.
So it's down
Right.
like 30%. So
Yeah.
I guess the point is it's just curious that you have a huge headwind, or you have huge tailwinds starting in November, I think it was October, November, when Biden came out with a statement, and you think, well, all's fair. Let's go at it. And you hear talk, but it's just, to me, it just seems weird that it would be the exact opposite of what you would have thought, where people are not looking to acquire it. So I don't know. I guess it's not as public of a market as copper is, right? Copper is just
No, it's not.
highly liquid.
And if you look at most of these commodity cycle markets, you'll see the same thing. The market gets ahead of itself constantly when the herd decides to move because it's decided that uranium or copper or whatever the commodity is in extreme deficit, then it's undervalued because of supply and demand, and the rush to it is immense and acute and immediate. And that's why you get those spikes. But what happens is it falls back once people realize, like lithium, you pull up a lithium one, you'll see the same kind of spike, and then you'll see that it falls back because everybody who's driving a car starts to buy his electric car and say, "Shit, I can't charge these things anywhere. There's no stations." And then people stop buying them, and then the lithium batteries are not in demand, and all of a sudden lithium goes down. So we're human beings that rush to judgment and rush to markets. And then we realize we rush too fast, we pull back. But then gradually you'll see that the demand for that particular metal evens out a bit. It will rise over the next few years, and it has to, unless everybody decides that the fires that we're seeing and the floods that we see that I believe are a result of climate change. We have to do something to clean up our air and our environment. So if we're going to do that, we're going to have to move away from fossil fuels, and we cannot do it with wind and solar alone. We have to have other alternatives, and that's why uranium would spike like that, drop off when we realize that nobody's going to build them that fast, and then it'll gradually go back up to 104, 150, but it'll take time. It'll take a few years, but it'll get there.
Yeah. Yeah. My understanding is they have to secure the uranium well in advance of building a plant anyway, just to make sure
Yeah,
they have that power in advance. But
yeah.
well, Gord, I appreciate you coming to the show and sharing your wisdom with us. Final thoughts you can give us, and where can people find more about you?
Yeah, yeah. Again, I'm the CEO of World Copper. It's www.worldcopperltd.com. My phone number, if anybody wants to call me directly or text me, is 604-657-7813. That's in Vancouver. We have 1 billion pounds of copper in the ground in Arizona. It's an oxide. It's environmentally friendly. We could get it into production in 3 years on our private land portion of it. And we could generate probably 70 million to 100 million pounds a year for 10 years for the American marketplace. And that's what we're planning on doing.
Awesome. Awesome, Gord. Well, I appreciate you coming to the show, sharing your wisdom with us, and yeah, look to have you back on in the future.
Yeah. Thank you, Kurt.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room.
All right, that was a great interview with Gord. Really appreciate him coming on the show. Now into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hi, Kirk. Hi, Phil. Happy to be here.
Glad to have you here. And we also have our very own Phil Weiss. Hey, Phil.
Hey, Kirk. Hey, Barb. Happy to be here as well.
Awesome. Well, let's dive right in. So, Barb, what were some of your takeaways from the interview?
There is a lot I don't know about copper, but I do know a thimbleful about commodities investing. So I learned a lot about copper and metals. And one of the things that really stuck out to me was there is a great undersupply given the expected demand for the future. So I'm curious, how's that going to play out during the next 10 years? And does that mean there are opportunities for investors? I'm not sure. So that's my overview.
Okay. Phil, what about you? What were some of your takeaways?
Well, I know as somebody who covered oil and gas stocks, I know that commodity investing is tough and pricing commodities is really hard because there's so many factors that we can't control that go into the pricing. I did think it was interesting when he started to talk about some of the uses of copper, which I just wasn't aware of, like the connection with nuclear and things like that. But in general, commodity investing is a tough thing. Like that's the thing that always sticks out in my mind.
Yeah, so Barb, I mean, we've got we talked about copper in the interview, but um how should we be thinking about this? Like, should individual investors be investing in copper? I mean, Gord was pretty convincing, but like, should people be investing in copper, or how should people be looking at this as from their investment standpoint?
Commodities typically don't come into the picture when you're talking about a diversified portfolio. Usually you'll look at stocks, bonds, and maybe a little bit of cash in a diversified investment portfolio. And there's a reason for that, because when we grow our investments, we want them to grow. And commodities have had notoriously low annualized returns. I'm looking at a chart right now from 1872 to 2023. So that's a long time. Now, on that chart, equities have earned an annual geometric return of 9%. Bonds a little over 4, T-bills about 4. Inflation has averaged in the 2% range during that time. Commodities have delivered 3%. So, in terms of investing, if the past is any guide, which it may not be, and they may surprise us in the future, commodities don't really deliver for a diversified investment portfolio. So, my vote is great. We need copper for a lot of things, but not for our investments.
Okay. Phil, what about you? Should people be investing in copper or
I tend to agree with what Barb said, and here's to me one of the things that makes commodity investing different. When we invest in a typical company, we're typically looking for companies that are going to grow revenues, going to grow sales, going to grow production, all those type of things. Yes, commodities, we may want them to grow production. But the hard thing is that if we go into some basic economic terms, we have price takers and price makers. Price makers would be like tech companies and pharmaceuticals, things like that, where they can set the price. Price takers are the ones that somebody else sets the price for them, and they just have to kind of take the price that the market sets. So that alone makes it difficult when you think about investing in growth and trying to project out where they're going. So when I covered oil and gas stocks, one of the things that I like to do when looking at them is look at their cost structure, because that was really important because that's something that they could control. They had a much better chance of controlling the costs of the inputs that were involved in extracting, mining, whatever you want to call it, that commodity. So I'd look at them. My interest was who had the lowest cost structure, because that way, if prices go crazy, like everybody can make money. But when prices go the other way, the companies that have the lowest cost structure have the best chance to survive. So that alone makes it different. And then you have the data that Barb cited. I mean, commodities, there are people that invest in them, but there's a lot of speculation that goes on with commodities. We don't really know, and the long-term returns just aren't strong enough. So I tend not to include them in client portfolios because I just have a tough time with them, and I don't think that the returns justify putting them in there.
Yeah, it's interesting. I mean, we were talking about this before the show, but a lot of commodities long term. I remember reading a book by Jim Rogers. I forget what it was called, but it was basically like the commodities boom or something like that. And what he talked about was that, and I think he wrote the book in the 2000s, in the early 2000s, and his pitch was basically that because he created a commodity index as a way to track it, but his pitch was basically that farmers are going to be driving Lamborghinis. Like that was like the imagery. He's like, agriculture and commodities are going to actually dominate in the next decade. And of course they haven't. And what's interesting is that if you look at history, if you look at like oil prices, for example, yeah, they're certainly a lot higher than they used to be. But I remember in 2000, like oil prices hadn't moved in like decades, right? And even now they're higher, but like they don't necessarily track inflation the same way that, house prices do. And, copper's kind of similar, right? And you'd think that all of these commodities should track inflation very closely, but yet they really don't. I mean, copper in the 90s, I think was pretty much from somewhere between 67 cents a unit upwards of $1.47, and now on the low end it's $1.47, like in a crash like 2009. But it's really kind of somewhere around like it's not really quite. It hits five a few times. It's really kind of like the high's really like four and three quarters down to, generally speaking, three and a quarter. Although in the mid tens it went down to two. So it's not like it's just taking off with inflation. It has a mind of its own. The thing that I find interesting is you have these big trends. We have renewable energy, right? We've got the uh, the electrical grid, which certainly needs a lot of copper. You have all these things that are there, nuclear power, all this stuff that need copper, and yet it's not taking off like you think it would. So I find that interesting and yet confusing at the same time. I don't know about you two, but to me, it just seems weird. Like, what's your experience, Barb? Like, how do you see this for like investing in commodities? Like, why are they not just taking off? There's more demand, so I don't know. There's some things I just don't understand.
I don't know why the laws of supply and demand don't seem to apply here. I have no idea. But I do have some information about how commodity prices relate during different inflationary scenarios. And that is a place where you might want to look at commodities because using the same four asset classes that we were talking about before, T-bills, bonds, equities, and commodities, when inflation, and this is during the period of 1872 to 2023, when inflation is above 6%, commodities outperform every other asset class and have averaged a 10% return. So file that in the back of your mind when inflation goes through the roof. Even in a 4 to 6% environment, inflationary environment, commodities delivered 6%. Now equities delivered close to 10, and T-bills delivered 6% too. So realistically, when inflation goes through the roof, that's when you might want to look at commodities.
Yeah, Phil, what do you think?
So I know I keep bringing up oil, but it is a commodity and it's the one that I'm familiar with the most. And so when I covered the oil and gas stocks, I had to make oil price forecasts. I get reporters calling me all the time, or if I went on the different CNBC and as a talking head, those kind of things. And I get asked, "What's your forecast for oil prices?" And I say, "So here's the thing: as part of my job, I'm supposed to forecast the price of oil, the price of natural gas. But now, so I'm going to give you a number, but I'm going to tell you this: there's about one number I can almost promise you it's not going to be, and that's the number I just gave you. And I did this for 6 years, 7 years. I got it right on the nose once. And here's why. It's the laws of supply and demand don't always apply. Like if you think about oil, you have countries, governments, their economy runs on oil. So they play games with producing more, producing less, depending upon what they need. There's so many factors that come into play that it's really hard to forecast. And like if you think back when we had the really big oil, if you go back to 2008, 2009, when the market was so bad, and right before that, oil prices spiked. Oil peaked at about $147, and there were people predicting it was going to 200. Instead, after hitting 147, it went down to like 30. Nobody predicted that. We have no idea. We can't predict because laws of supply and demand simply don't apply because there's other external factors that we can't forecast that get in the way. And that's one of the other things that makes investing in commodities so hard. You can talk about gold, or like I think about back in my corporate career, and I went to like a new managers program, and the company that I worked for was a commodity company, part of their business. They also had a pharmaceutical business. That's how used to have the pharmaceuticals used to be broadly diversified. They had chemicals and they had pharmaceuticals and they had other things. And I remember going and I was doing transfer pricing work where you're looking at how goods are priced when they cross borders. And I was talking to the head of one of the divisions, and they sold acetic acid. And he said, "Here's the thing. If I sell acetic acid, I'm just going to make up a price at 30 cents a gallon. And my customer comes to me and says, the guy down the street will give it to me for 29 and a half cents a gallon. Either I cut my price to match his, or I don't take it because there's no fundamental difference between my acetic acid and his. So it doesn't really matter. So it's all about the price. That matters so much. So like there's just it's just a different kind of market. When you can go and get the same exact thing from somebody else, it's hard to try and push up prices. When we have inflation, sure, prices can go up, but beyond that, it's harder. The other thing that happens too, and we did a case study on this. And if you know, like the soda bottles, they used to be made from, I don't know if they still are because I don't follow this that closely, but they were made from PET resin. And when demand for that started to skyrocket, everybody goes and builds more production. But guess what happens? That leads to oversupply, and then prices plummet. So if you don't time the market just right, you lose. So like that's what I'm talking about. There's all these external factors you can't control. What's your neighbor doing, right? Like copper, there's not just one producer. There's many producers. And if one starts ramping up production because they think prices are coming up and everybody else follows suit, guess what happens? Prices fall.
Yeah, I have to tag on to that because what I find fascinating. So I'm gonna bring up a few examples of what Phil's saying, because supply and demand technically does impact the markets, but there's things in there that we can't predict, and I always kind of play that into the politic realm. Like there's an element of politics in here with oil prices. That's why I don't touch oil prices, because it could be the Saudis do something and impact the oil prices. Well, that has nothing to do with supply and demand, right? It has to do with they control the supply and demand. They say, well, we think they're too low. We're going to stop producing barrels. And then it'll spike, right? Or the Russians do it, or all these countries. And all the stuff has to do with politicking and not really supply and demand in the traditional way. It has to do with, I'm going to harm this person. I mean, look at the U.S. We're one of the largest oil producer or natural gas. I think we're the largest natural gas producer right now. But we have so much untapped capacity. We've had years where they were literally just burning off natural gas because they had nowhere to put it. It was just excess, and they were just lighting it on fire because there's nothing they could do with it. And so, you look at these elements, and it doesn't always make sense. The ones I look at, for instance, like let's take gold and silver, for instance. Now, gold and silver historically tagged towards inflation hedges. Now, gold went on a super run from pretty much 99 up until 2011, I think it was. And then it went down for a while, and then it started to spike up again. And it's gone on a ride for it pretty much went sideways from 2020 up to 2024, and then it just took off. Um, Now, the old peak in 2011, which was like one of the high points in gold, was 19. I think it hit a point of 1925. Now it's at 2900 and change. Now you look at silver, and the high point was 2011. It hit $50. And I'm not looking at the 80s highs. I'm just saying for recent highs. So the high was $50. And then it went down. Right now it's at 33. So why is silver much lower than gold? Now they're similar, right? If you look back in history, gold is like the rich man's wealth, and silver is like the middle class, and the copper was like poor people's wealth. Like that's in Roman times, that's kind of how it was distinguished. So if you think of it in that terms, gold is like the best. Yeah, I mean, I know people like it platinum, and forget platinum for a minute, but just looking at these two commodities, right? I can bring in platinum, palladium as well because those are interesting as well. But like silver, it's, I mean, it's what is it like 40% below its recent highs in like the last few decades. Gold is well exceeding that. Why? It's similar. They're both precious metals, and there's been an argument for a long time, which I've followed, that silver is so undervalued and from a supply demand perspective, and everyone always makes this argument: silver, silver, silver. It's like gold on steroids, and it's so undervalued, and it's used for all these things. I've heard all the arguments. I've read them. I know all the people who make them. So why is silver underperforming? I don't know. I mean, honestly, I've done a lot of research. I've talked to people who are the best and the brightest in the space. They don't know either. No one seems to know. Why is it? Well, what it always comes down to is, well, it's being manipulated. It's the banks that are manipulating it down to keep it low for their own nefarious purposes. What purposes? Like they would own gold, not silver. Like why are they? So to me, it's not that they're wrong. I don't know if they're right or wrong. I wasn't in the cabal room, in the backyard cabal room, where it's everybody's hanging out and divvying up the world and in slices of a pie. I don't know what they're saying behind the scenes, but to me it doesn't make sense. Why? Silver has a lot of industrial uses, it has jewelry uses, it has a lot of uses beyond gold, and yet gold is more expensive. Okay, for whatever reason it is. Silver has not performed in the way you'd expect. Why? I don't know. There's certainly demand. There's a lot of demand for it. It's not living up to his expectations. Let's look at platinum. Platinum peaked out in 2008, and it's less than half of the price then. It's basically gone sideways for like the last 10 years. Why? Gold's taken off. Silver's even doing better, but platinum's sideways. Now, there is an element of, globalism that comes in here with Russia and all that. Like palladium, that's a piece here too. I mean, palladium spiked up in the last few years, but now it's down. The point being is these are all related commodities. They're all metals. They're all quote unquote precious metals, or they fit in that category somewhat. Copper's not, but the point being is they're all similar. Gold's the only one that's really going through the roof. Why? Don't know. So here's another one. Uranium. We talked about this in the show with nuclear. Why the heck is uranium not taking off? Everyone's talking about how nuclear is the new theme. Trump's talking about it. Even Biden came out and said, yeah, we're going to get rid of regulation. I don't know what he did, but at least he was stumping for it. And I give him credit for being the first person to come out in favor of nuclear. He might not know what he was saying, but I give him credit for it, right? And so I think, it paves the way for Trump to actually make some progress here. I know they've talked about it. Everyone's talking about it. Silicon Valley's throwing money behind it. So, they see it. AI is going to eat our lunch because we don't have enough electricity. So we need nuclear, but it'll take a long time to develop these plants. But why, with the whole world in favor of nuclear now, is uranium not going through the roof? I don't know. No one can figure it out. There was actually a podcast I listened to where there's a guy who researched this. He runs a hedge fund, and he was trying to figure it out. and he's out there talking to people, he's educating people. Here's where and it's like, it's this weird commodity. It's priced by a handful of people who just decide, I'm going to pick this number. Like it was just random pricing, and it wasn't supply and demand based. And these are people who basically supply the contracts. So say, I need, 1 million pounds of uranium over the next 20 years. The contract is for uranium at $5, let's say. And that's the number. For the next, 10, 20 years, it's $5 for them. But we're going to need more, and yet they're not elevating the pricing. So to me, it's one of those areas where there's a huge opportunity, yet at the same time, it's not being realized, and smart people looking at it like, what's going on? This doesn't make sense. So it feels like artificial manipulation. And I think this is why a lot of people go to that place of there's a cabal of people, suppressing the price for their own purposes. Okay, what purposes? Who are they? Who are these people? I don't know. And I'm not saying that doesn't exist, right? Of course it exists. You've got a small group of people, they can do things like that. It's not legal, but let's be honest, they probably do that. Wink, wink, nod, nod kind of a thing. But the point is when you have a massive shift, it just doesn't make sense. Like it's got to be more than just quote unquote manipulation, because if you were manipulating prices lower, then naturally people would buy up as much as they could and there wouldn't be any, which means you'd have to pay a higher price to get it. That's how supply and demand works. So there's got to be more to it, and you're not going to get an answer from any of us yahoos, because apparently we don't understand it either. But it's something to keep in mind. Like we as human beings always feel like we need to have an answer for everything. We cannot have an unknown. We're very uncomfortable with unknowns. We're talking about something we can't put our finger on. We know it exists, but we don't know why. That freaks people out. Like, I need an answer. It's the boogeyman. It's George Soros. It's the cabal behind the scenes that are doing this. There's always a reason that people are giving to the problem that they're facing if they can't find one. So they make one up. That's how our brains work. We fill in the gaps in our brain. We make things up, which is puzzling because AI kind of does the same thing. If they don't have an answer, it just kind of makes it up. So it's kind of human. But that's how our brains work. So we need to understand that there may not always be a discernible reason. That's why it's important to look at price as the final arbiter. Price is always correct. It doesn't matter if you think it's wrong. If you think it's wrong and the price is still the price, that means you're wrong. It means you've missed something in your deduction that has shown you that it is incorrect. You're like, well, it should be 10, it's only 5. Okay, you're missing something. And you might not realize ever what that something is, but you have to realize that. And maybe the answer is, I don't invest in this thing I don't fully understand. Or maybe the answer is, I'm just going to be a technical analyst and go based on charts because I don't understand it. So the charts are right. So if it's going up, it must be correct. I mean, look at lumber a few years ago during COVID. I mean, lumber was a mess. It went from some low price, and I'm trying to pull it up here. Yeah, it's not showing recent prices on lumber. Anyway, there was like a big spike during COVID and then went down and spiked even higher. That was supply and demand driven. I knew that because I know a lot of builders and they were saying we can't find any. So ultimately supply and demand still works. The question is there something else you're missing? So
Kirk, I'd like to just add something to what you're talking about. So I thought this applied to gold and silver, but it's not. It's just something that people look at is the ratio between gold and silver prices. But like to give you an example where I know what the ratio is, and it does apply, as we were talking about before the show, on an energy equivalent basis, oil is six times more valuable than natural gas. So if we have oil trading at, let's just to make the math easy, it's around $78 right now. That would mean natural gas should trade for $13. It doesn't. It doesn't trade for anywhere near that. Why? There's difference in the uses, there's difference in the transportability. There are some factors, but not enough to justify the fact that it's not anywhere close to that 6-to-1 ratio. So when people are looking at gold and silver, like I said, I thought there was a specific ratio. I took a quick look while you were talking and I didn't see it, but people do look and say, it's 80 to 1, like it's 30, it's 40, it's whatever it is. And depending upon that ratio, that's when they think that silver's undervalued. But again, that doesn't mean it really is. We're just kind of, like you said, if you're going to do this kind of stuff, it seems like you need to be more of a technical analyst than a fundamental analyst because the fundamentals don't apply the way that we think that they would to commodities. There's just a lot of other factors that we can't forecast or can't understand.
Yeah, and I agree. And there's a few podcasts I listen to. One of them, he's an oil guy, and he talks about oil. And I listen to his show constantly. He's consistently wrong about oil. Every time he's like, "Well, here's what's going to happen. Here's why it's going to happen." It goes the opposite way almost every single time. It's almost like I don't want to put this on him, and that's why I'm not naming him. Like he's nefariously, going against the grain. But like, because there are a lot of people who do that, by the way. They'll say you should do this, so then they go the other way. George Soros is notorious for this. He's like, "Oh, I'm going to short the euro." Of course, he's going long the euro. There are people who do that. A lot of hedge fund managers do it. But this guy's not actively trading. Like he does his own money, but it's not big enough, so there's no reason for him to do that. The market's too big where he doesn't need to move it. But the point is I look at that and I'm like, why are you consistently wrong? Well, it's because he doesn't know. Like it's a guess. And supply and demand should work, but it doesn't always.
Think back to like, again, if you go back to like that 2008, 2009, there was all these people writing books, peak oil. We're at peak oil. We're in trouble. We're not going to have enough supply. And then all of a sudden, shale oil came. Did people see that coming? No, but it happened and it had a radical change in what the available supply was, an immeasurable change. Like that's how the US went from not having enough oil to where we are now, it's something I believe we have surpassed Saudi Arabia in terms of our average daily production. Why? Because of shale, which nobody saw. That wasn't a thing until it was. But people were writing. I went to presentations when I was an analyst about peak oil, and it's based upon the idea that in a conventional well, you have a supply curve. Production ramps up and then it falls off and then it goes away. But it's very different when you bring on new sources of supply.
Yeah, absolutely. Yeah, it's fascinating. You have to really dive in deep in this stuff, and even if you know it, you can still be wrong. So, all the good commodities investors I know are traders. They're not fundamental people. And maybe you can do that. Maybe some people are good at it. I don't know, but I've never tried to do it. I've thought about it, and I was like, this is just too hard. The only markets I know are gold and silver, and I know them well enough to know that I don't know the actual answer like as to why things are moving, but I just follow the price. And I know the markets well enough to know that I can manage the price flow. Um, I know when it's a bull market or not. Like gold was sideways for a bunch of years and broke out last year, and that was good. Um, but I also know that like a lot of people are gold bugs where they're tied to it. There's like gold all the time. It's like the annuity salesman. It's annuities all the time. Oh, you're retiring. You need annuity. Oh, you skinned your knee. Oh, there's annuity for that. It's the same thing with like gold. It's like, oh, what are you investing in? Gold. What else? Gold jewelry. Gold bars, gold coins. Like, there are other asset classes. They're like, nope, it's gold. The country's going to shit, and everything's going to zero. We're gonna be living in caves, and I need my gold. Like, really? Like, I mean, I get the understanding. Like, some people are baked into that, and there's nothing wrong with being a prepper. But I'm pretty sure that if gold was the only solution, my biggest problem is not going to be whether I have gold or not. Okay. And second of all, are you going to really need gold if we're in the zombie apocalypse? We're not going to be trading gold. We're going to be trading guns and bullets and food. So realistically, if you really pull it out to that scenario that you're in, you realize that gold's really not helpful. It's useful to preserve wealth. And if that's your point, great. But, in a crash, gold still goes down. 2009, even though it was ended up in the fall, it went down like everything else. Even though they weren't minting coins during COVID, gold didn't do what you think it should have done. I was actually shocked. There's a big discrepancy between the price of buying coins and actually getting them because gold went from, I think it was like 16, 1700 down to like 14, 1500 during COVID. And yet you couldn't find coins. So there's no supply and a big demand. And yet gold prices went down. What's that about? I mean, people weren't minting coins. You couldn't get them. And yet the price it wasn't what it was supposed to be. So you see these discrepancies and it's like, okay, I whatever. Like I can't determine whether that's correct or not. But obviously it's played out in the positive over time, but in the short term, it doesn't always. So Anyway, Barb, final thoughts from you as we kind of wrap it up here.
Invest in what you know. Invest in what you can understand. If you want to take a flyer on commodities, okay, educate yourself and become a trader. Like Kirk, I know nothing about this, so I can't give you any advice. But if you want to dip your toes into commodities, there's plenty of ETFs, which you can get into and out of very quickly. Personally, I'll stick with stocks, bonds, cash, and real estate. I understand them. They move in ways that you can grasp. If a business is growing, its stock price will go up. Now, sometimes the price will get ahead of itself and become higher valued than the actual business is worth. But I can see that on a sheet of balance sheet and ratios, and I can understand I'm paying a premium for that because it's a very popular company. Also, with the understanding that at some point it might come back down to fair value. So, there's a lot more to understand when you're in the stock, bond, cash, real estate markets. So, I am Barbara Friedberg. You can find me at YouTube and at Barbara Friedberg Personal Finance. See you next time.
Thanks for coming on, Barb. Phil, final thoughts from you.
This, as Barb said, invest in what you know. I mean, even Warren Buffett says, invest in what you know. That applies even if you're investing in stocks or anything. Invest in things you understand. I remember there's been times when I've changed my mind about an investment because I no longer understood it or realized I didn't understand it. And those are the type of things you want to stay away from. If you want to have something like this in your portfolio, I think it needs to be a small allocation and it should be through an ETF. As for me, you know, my firm is Apprise Wealth Management. I know experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. If you're facing a new beginning, you can take our Flourish Through Life's Big Changes assessment at apprisewealth.com/assessment to discover how ready you are to embrace and thrive your significant life transition. You can also sign up for our blog. Thanks for having me today, Kirk.
Yeah, thanks for coming on, Phil. And that's the show for this week. I will point out one last thing we didn't talk about as much is the impact on copper on inflation and the Dr. Copper moniker, which if anyone hasn't heard that, you should. Dr. Copper is kind of an indicator for the future where it starts to take off. It's usually a sign of the economy taking off. So people refer to it as Dr. Copper because it is used for determining health of the economy. Also, obviously, has some impact on inflation. We didn't talk about as much, but anyway, just some things to know.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.